Alright guys, what's up? Hit that like button, subscribe if you haven't already done so. This earnings is getting ready to kick off in 1 minute. We're going to get this set up. I have all the charts and what we're going to do. After the earnings call, we'll take some notes. We'll ask, if you guys have questions, post them below. Let's go throw up. I'm going to throw up here all of the, pretty much the majority of the semiconductors. We'll throw up some Google, Apple, all that fun stuff. The S&Ps, Qs, top right, top left is Nvidia. Alright. We'll throw this up here so that we can see what's going on. Appreciate you guys, and it's going to be kicking off right now. We'll have level 2 down here as well. Semiconductors. Snowflake is down here to the bottom left. Had a really nice earnings call, guys. And then AMD, Micron. If you want me to get rid of the S&Ps and the Qs are up here. I mean, we know if the markets are going higher, these are going higher. As you can tell, AMD didn't even get above high a day. Pay attention to that. If you want me to put a few different semiconductors and maybe leave the Qs up, if you want me to get rid of the indexes, I can. You guys let me know what tickers you want right here in chat. All right, these earnings are getting ready to kick off, guys. Here in just 2 minutes here at 5 p.m. and then maybe a minute or two afterwards. Just checking in. If this sounds good, let me know. If you guys could, hit the like button, subscribe. If you guys have questions, post them below. We'll see what happens here. I mean, SMCI, AMD, Intel, you know, the crew is down under, all right? That's all good. You know, we know what Nvidia is, right? Nvidia is one of a kind. Probably the best company right now, quarter over quarter, as far as the growth, cash on hand, all that fun stuff. Now you just got a stock split, 10 for 1. I'm gonna tell you right now, I own it. I've owned it for a while, but this does kind of entice me to have others go buy it, even though, yes, it's a little high. Yes, they may be a little down. We'll talk about these earnings. $6.12. So the rate of change, like we look at inflation, you can look at the earnings for Nvidia. We go to, real quick, the daily chart. You know, if you just look past, if you look here in the past, guys, I mean, you know, $1.36, 50 cents, 58, 88, $1.09, 27, 42, 516, 62. They're still growing, so that growth aspect is still there. It is slowing though, but they're still raising. You know, they raised guidance and they met it. So far, they're meeting it. So we'll see where we are by the end of the year. Pay attention to the next couple quarters, the rate of this change, and if you get and the day that we get a lower number EPS. Okay, the day we get that lower number than the prior quarter. So, you saw the hesitation when the number first came out. It was, look at that wick. Boom. I will say this. There's some stuff that's lining up with Snowflake. We just got the first earnings from the new CEO from Snowflake. We'll talk more about this. Snowflake has a nice setup. I'll show you guys real quick going into tomorrow. All right. If you look here at $1.80 or 185, 184, if we go to the daily chart, you can see here, look at this 185, 190 level, right? 190 is what it was. 190. So I would look for this tomorrow and going forward on Snowflake. All right, this is I feel like you're going to have a lot of people worried about Nvidia and semiconductors, and then you have Snowflake and some of these other companies over here that could really give us some follow through up to 190. So I'm going to be looking to be trading this, you know, going into the rest of the week and going into next week. So these earnings are getting ready to kick off. Let's get right to it. Appreciate you guys for being here. If you could, hit the like button, subscribe. If you don't know, we trade live right here Monday through Friday. We had a killer day today. I mean, all the call outs, right? Starbucks up 500% just today. So let's get right to these earnings. They're getting ready to kick off. Let me get rid of this because it is 5 p.m., 1 minute until earnings. Let's see what they have to say. Take some notes. And I'll catch you guys at the end of the earnings call. And we'll talk about it during if we get time. If you have questions, please post them below. Again, I truly thank you guys for being here. Level 2, okay, is to the bottom left here. 173, 173.10. You got a 10-cent spread there on Nvidia. That is for Nvidia. This was for options on the right-hand side that we don't really need to worry about right this minute. So let's go. Hit that like button. Subscribe. If you haven't already done so, we're trying to get to 1,000 subscribers. Let's kick this off.
Good afternoon. My name is Regina, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2025. The content of today's call is NVIDIA's property. It can be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 22nd, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight some upcoming events. On Sunday, June 2nd, ahead of the Computex Technology Trade Show in Taiwan, Jensen will deliver a keynote which will be held in person in Taipei, as well as streamed live. And on June 5th, we will present at the Bank of America Technology Conference in San Francisco. With that, let me turn the call over to Colette.
Thanks, Simona. Q1 was another record quarter. Revenue of $26 billion was up 18% sequentially and up 262% year-on-year, and well above our outlook of $24 billion. Starting with data center. Data center revenue of $22.6 billion was a record, up 23% sequentially and up 427% year-on-year, driven by continued strong demand for the Nvidia Hopper GPU computing platform. Compute revenue grew more than 5x, and networking revenue more than 3x from last year. Strong sequential data center growth was driven by all customer types, led by enterprise and consumer internet companies. Large cloud providers continue to drive strong growth as they deploy and ramp Nvidia AI infrastructure at scale and represented the mid-40s as a percentage of our data center revenue. Training and inferencing AI on Nvidia CUDA is driving meaningful acceleration in cloud rental revenue growth, delivering an immediate and strong return on cloud providers' investment. For every $1 spent on Nvidia AI infrastructure, cloud providers have an opportunity to earn $5 in GPU instant hosting revenue over 4 years. NVIDIA's rich software stack and ecosystem and tight integration with cloud providers makes it easy for end customers to get up and running on NVIDIA GPU instances in the public cloud. For cloud rental customers, NVIDIA GPUs offer the best time to train models, the lowest cost to train models, and the lowest cost to inference large language models. For public cloud providers, NVIDIA brings customers to their cloud, driving revenue growth and returns on their infrastructure investments. Leading LLM companies such as OpenAI, Adept, Anthropic, Character AI, Cohere, Databricks, DeepMind, Meta, Mistral, xAI, and many others are building on NVIDIA AI in the cloud. Enterprises drove strong sequential growth in data center this quarter. We supported Tesla's expansion of their training AI cluster to 35,000 H100 GPUs. Their use of NVIDIA AI infrastructure paved the way for the breakthrough performance of FSD version 12, their latest autonomous driving software based on vision. Video transformers, while consuming significantly more computing, are enabling dramatically better autonomous driving capabilities and propelling significant growth for NVIDIA AI infrastructure across the automotive industry. We expect automotive to be our largest enterprise vertical within data center this year, driving a multi-billion revenue opportunity across on-prem and cloud consumption. Consumer internet companies are also a strong growth vertical. A big highlight this quarter was Meta's announcement of Llama 3, their latest large language model, which was trained on a cluster of 24,000 H100 GPUs. Llama 3 powers Meta AI, a new AI assistant available on Facebook, Instagram, WhatsApp, and Messenger. Llama 3 is openly available and has kickstarted a wave of AI development across industries. As generative AI makes its way into more consumer internet applications, we expect to see continued growth opportunities as inference scales both with model complexity as well as with the number of users and number of queries per user, driving much more demand for AI compute. In our trailing 4 quarters, we estimate that inference drove about 40% of our data center revenue. Both training and inference are growing significantly. Large clusters, like the ones built by Meta and Tesla, are examples of the essential infrastructure for AI production, what we refer to as AI factories. These next-generation data centers host advanced, full-stack, accelerated computing platforms where the data comes in and intelligence comes out. In Q1, we worked with over 100 customers building AI factories ranging in size from hundreds to tens of thousands of GPUs, with some reaching 100,000 GPUs. From a geographic perspective, data center revenue continues to diversify as countries around the world invest in sovereign AI. Sovereign AI refers to a nation's capabilities to produce artificial intelligence using its own infrastructure, data, workforce, and business networks. Nations are building up domestic computing capacity through various models. Some are procuring and operating sovereign AI clouds in collaboration with state-owned telecommunication providers or utilities. Others are sponsoring local cloud partners to provide a shared AI computing platform for public and private sector use. For example, Japan plans to invest more than $740 million in key digital infrastructure providers, including KDDI, Sakura Internet, and SoftBank, to build out the nation's sovereign AI infrastructure. France-based Scaleway, a subsidiary of the Iliad Group, is building Europe's most powerful cloud-native AI supercomputer. In Italy, Swisscom Group will build the nation's first and most powerful Nvidia DTX-powered supercomputer to develop the first LLM natively trained in the Italian language. And in Singapore, the National Supercomputer Center is getting upgraded with Nvidia Hopper GPUs, while Singtel is building Nvidia's accelerated AI factories across Southeast Asia. Nvidia's ability to offer end-to-end compute to networking technologies, full-stack software, AI expertise, and rich ecosystem of partners and customers allows sovereign AI and regional cloud providers to jumpstart their country's AI ambitions. From nothing the previous year, we believe sovereign AI revenue can approach the high single-digit billions this year. The importance of AI has caught the attention of every nation. We ramped new products designed specifically for China that don't require an export control license. Our data center revenue in China is down significantly from the level prior to the imposition of the new export control restrictions in October. We expect the market in China to remain very competitive going forward. From a product perspective, the vast majority of compute revenue was driven by our Hopper GPU architecture. Demand for Hopper during the quarter continued to increase. Thanks to CUDA algorithm innovations, we've been able to accelerate LLM inference on H100 by up to 3x, which can translate to a 3x cost reduction for serving popular models like Llama 3. We started sampling the H200 in Q1 and are currently in production with shipments on track for Q2. The first H200 system was delivered by Jensen to Sam Altman and the team at OpenAI and powered their amazing GPT-4o demos last week. H200 nearly doubles the inference performance of H100, delivering significant value for production deployments. For example, using Llama 3, which with 700 billion parameters, a single Nvidia HGX H200 server can deliver 24,000 tokens per second, supporting more than 2,400 users at the same time. That means for every $1 spent on Nvidia HGX H200 servers at current prices per token, an API provider serving Llama 3 tokens can generate $7 in revenue over 4 years. With ongoing software optimizations, we continue to improve the performance of NVIDIA AI infrastructure for serving AI models. While supply for H100 improve, we are still constrained on H200. At the same time, Blackwell is in full production. We are working to bring up our system and cloud partners for global availability later this year. Demand for H200 and Blackwell is well ahead of supply, and we expect demand may exceed supply well into next year. Grace Hopper Superchip is shipping in volume. Last week at the International Supercomputing Conference, we announced that 9 new supercomputers worldwide are using Grace Hopper for combined 200 exaflops of energy-efficient AI processing power delivered this year. These include the ALPS supercomputer at the Swiss National Supercomputing Center, the fastest AI supercomputer in Europe, Isambard AI at the University of Bristol in the UK, and Jupiter in the Jülich Supercomputing Center in Germany. We are seeing an 80% attach rate of Grace to Hopper in supercomputing due to its high energy efficiency and performance. We are also proud to see supercomputers powered with Grace Hopper take the number 1, the number 2, and the number 3 spots of the most energy efficient supercomputers in the world. Strong networking year-on-year growth was driven by InfiniBand. We experienced a modest sequential decline, which was largely due to the timing of supply, with demand well ahead of what we were able to ship. We expect networking to return to sequential growth in Q2. In the first quarter, we started shipping our new Spectrum-X Ethernet networking solution optimized for AI from the ground up. It includes our Spectrum-4 switch, Bluefield 3 DPU, and new software technologies to overcome the challenges of AI on Ethernet to deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Spectrum-X is ramping in volume with multiple customers, including a massive 100,000 GPU cluster. Spectrum-X opens a brand new market to NVIDIA networking and enables Ethernet-only data centers to accommodate large-scale AI. We expect Spectrum-X to jump to a multi-billion-dollar product line within a year. At GTC in March, we launched our next-generation AI factory platform, Blackwell. The Blackwell GPU architecture delivers up to 4x faster training and 30x faster inference than the H100 and enables real-time generative AI on trillion-parameter large language models. Blackwell is a giant leap with up to 25x lower TCO and energy consumption than Hopper. The Blackwell platform includes the 5th generation NVLink with a multi-GPU spine and new InfiniBand and Ethernet switches, the X800 series, designed for a trillion-parameter scale AI. Blackwell is designed to support data centers universally, from hyperscale to enterprise, training to inference, x86 to gray CPUs, Ethernet to InfiniBand networking, and air cooling to liquid cooling. Blackwell will be available in over 100 OEM and ODM systems at launch, more than double the number of Hoppers launched and representing every major computer maker in the world. This will support fast and broad adoption across the customer types, workloads, and data center environments in the first year of shipments. Blackwell time-to-market customers include Amazon, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. We announced a new software product with the introduction of Nvidia Inference Microservices, or NIM. NIMs provide secure and performance-optimized containers powered by Nvidia CUDA acceleration in network computing and inference software, including Triton Inference Server and TensorRT LLM with industry-standard APIs for a broad range of use cases, including large language models for text, speech, imaging, vision, robotics, genomics, and digital biology. They enable developers to quickly build and deploy generative AI applications using leading models from NVIDIA, AI21, Adept, Cohere, Getty Images, and Shutterstock, and open models from Google, Hugging Face, Meta, Microsoft, Mistral AI, Snowflake, and Stability AI. NIMs will be offered as part of our NVIDIA AI Enterprise software platform for production deployment in the cloud or on-prem. Moving to gaming and AI PCs. Gaming revenue of $2.65 billion was down 8% sequentially and up 18% year-on-year, consistent with our outlook for a seasonal decline. The GeForce RTX Supers GPUs market reception is strong and end demand and channel inventory remain healthy across the product range. From the very start of our AI journey, we equipped GeForce RTX GPUs with CUDA Tensor cores. Now with over 100 million of an installed base, GeForce RTX GPUs are perfect for gamers, creators, AI enthusiasts, and offer unmatched performance for running generative AI applications on PCs. NVIDIA has full technology stack for deploying and running fast and efficient generative AI inference on GeForce RTX PCs. TensorRT LLM now accelerates Microsoft Phi 3 mini model and Google's Gemma 2B and 7B models, as well as popular AI frameworks, including LangChain and Llama Index. Yesterday, NVIDIA and Microsoft announced AI performance optimizations for Windows to help run LLMs up to 3x faster on NVIDIA GeForce RTX AI PCs. And top game developers, including NetEase Games, Tencent, and Ubisoft, are embracing NVIDIA Avatar Character Engine to create lifelike avatars to transform interactions between gamers and non-playable characters. Moving to ProViz. Revenue of $427 million was down 8% sequentially and up 45% year-on-year. We believe generative AI and Omniverse industrial digitalization will drive the next wave of professional visualization growth.
Something's going on with Snowflake on
At
their earnings
GTC,
call.
we announced new Omniverse Cloud APIs to enable developers to integrate Omniverse industrial digital twin and simulation technologies into their applications. Some of the world's largest industrial software makers are adopting these APIs, including Ansys, Cadence, 3D Excite, at Dassault Systems, Brand, and Siemens. And developers can use them to stream industrial digital twins to spatial computing devices such as Apple Vision Pro. Omniverse Cloud APIs will be available on Microsoft Azure later this year. Companies are using Omniverse to digitalize their workflows. Omniverse-powered digital twins enable Wistron, one of our manufacturing partners, to reduce end-to-end production cycle times by 50% and defect rates by 40%. And BYD, the world's largest electric vehicle maker, is adopting Omniverse for virtual factory planning and retail configurations. Moving to automotive, revenue was $329 million, up 17% sequentially and up 11% year-on-year. Sequential growth was driven by the ramp of AI cockpit solutions with global OEM customers and strength in our self-driving platforms. Year-on-year growth was driven primarily by self-driving. We supported Xiaomi in the successful launch of its first electric vehicle, the SU7 sedan built on the Nvidia Drive Orin, our AI car computer for software-defined AV fleets. We also announced a number of new design wins on Nvidia Drive Thor, the successor to Orin, powered by the new Nvidia Blackwell architecture, with several leading EV makers, including BYD, XPeng, GAC's Ion Hyper, and Neural. Drive Thor is slated for production vehicles starting next year. Okay, moving to the rest of the P&L. GAAP gross margin expanded sequentially to 78.4% and non-GAAP gross margins to 78.9% on lower inventory charges. As noted last quarter, both Q4 and Q1 benefited from favorable component costs. Sequentially, GAAP operating expenses were up 10% and non-GAAP operating expenses were up 13%, primarily reflecting higher compensation-related costs and increased compute and infrastructure investments. In Q1, we returned $7.8 billion to shareholders in the form of share repurchases and cash dividends. Today, we announced a 10-for-1 split of our shares, with June 10th as the first day of trading on a split-adjusted basis. We are also increasing our dividend by 150%. Let me turn to the outlook for the second quarter. Total revenue is expected to be $28 billion, plus or minus 2%. We expect sequential growth in all market platforms. GAAP and non-GAAP gross margins are expected to be 74.8% and 75.5%, respectively, plus or minus 50 basis points, consistent with our discussion last quarter. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4 billion and $2.8 billion, respectively. Full-year OpEx is expected to grow in the low 40% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $300 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. I would like to now turn it over to Jensen, as he would like to make a few comments.
Thanks, Colette. The industry is going through a major change. Before we start Q&A, let me give you some perspective on the importance of the transformation. The next industrial revolution has begun. Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding revenue opportunities. CSPs were the first generative AI movers. With Nvidia, CSPs accelerated workloads to save money and power. The tokens generated by Nvidia Hopper drive revenues for their AI services. And Nvidia Cloud instances attract rental customers from our rich ecosystem of developers. Strong and accelerating demand for generative AI training and inference on the Hopper platform propels our data center growth. Training continues to scale as models learn to be multimodal. understanding text, speech, images, video, and 3D, and learn to reason and plan. Our inference workloads are growing incredibly. With generative AI, inference, which is now about fast token generation at massive scale, has become incredibly complex. Generative AI is driving a from foundation up, full stack computing platform shift that will transform every computer interaction. From today's information retrieval model, we are shifting to an answers and skills generation model of computing. AI will understand context and our intentions, be knowledgeable, reason, plan, and perform tasks. We are fundamentally changing how computing works and what computers can do. From general purpose CPU to GPU accelerated computing, from instruction-driven software to intention understanding models, from retrieving information to performing skills. And at the industrial level, from producing software to generating tokens, manufacturing digital intelligence. Token generation will drive a multi-year build-out of AI factories. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. The Blackwell platform is in full production and forms the foundation for trillion parameter scale generative AI. The combination of Grace CPU, Blackwell GPUs, NVLink, Quantum, Spectrum, NICs and switches, high-speed interconnects, and a rich ecosystem of software and partners let us expand and offer a richer and more complete solution for AI factories than previous generations. Spectrum X opens a brand new market for us to bring large-scale AI to Ethernet-only data centers. And Nvidia NIMs is our new software offering that delivers enterprise-grade, optimized generative AI to run on CUDA everywhere, from the cloud to on-prem data centers to RTX AI PCs, through our expansive network of ecosystem partners. From Blackwell to Spectrum X to NIMs, we are poised for the next wave of growth. Thank you.
Thank you, Jensen. We will now open the call for questions. Operator, could you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question. Your first question comes from the line of Stacy Rasgon with Bernstein. Please go ahead.
Hi, guys. Thanks for taking my questions. My first one, I wanted to drill a little bit into the Blackwell comment that it's in full production now. What does that suggest with regard to shipments and delivery timing if that product doesn't sound like it's sampling anymore? What does it mean when that's actually in customers' hands if it's in production now?
We will be shipping. Well, we've been in production for a little bit of time, but our production shipments will start in Q2 and ramp in Q3, and customers should have data centers stood up in Q4.
Got it. So this year we will see Blackwell revenue, sounds like.
We will see a lot of Blackwell revenue this year.
Our next question will come from the line of Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. I wanted to ask Jensen about the deployment of Blackwell versus Hopper, just given the system's nature and all the demand for GB that you have. How does the deployment of this stuff differ from Hopper? I guess I ask because liquid cooling at scale hasn't been done before, and there's some engineering challenges both at the node level and within the data center. So do these complexities sort of elongate the transition, and how do you sort of think about how that's all going. Thanks.
Yep. Blackwell comes in many configurations. Blackwell is a platform, not a GPU. And the platform includes support for air-cooled, liquid-cooled, x86, and Grace, InfiniBand, now Spectrum X, and very large NVLink domain that I demonstrated at GTC, that I showed at GTC. And so for some customers,
That's a good question. Pay
they
attention
will
to it, guys.
ramp
It's talking about
into their existing install base of data centers that are already shipping Hoppers. They will easily transition from H100 to H200 to B100. And so Blackwell systems have been designed to be backwards compatible, if you will, electrically, mechanically. And of course, the software stack that runs on Hopper will run fantastically on Blackwell. We also have been priming the pump, if you will, with the entire ecosystem, getting them ready for liquid cooling. We've been talking to the ecosystem about Blackwell for quite some time. And the CSPs, the data centers, the ODMs, the system makers, our supply chain beyond them, the cooling supply chain base, liquid cooling supply chain base, data center supply chain base. No one is going to be surprised with Blackwell coming and the capabilities that we would like to deliver with Grace Blackwell 200. GB200 is going to be exceptional.
Our next question will come from the line of Vivek Arya with Bank of America Securities. Please go ahead.
Thanks for taking my question. Jensen, how are you ensuring that there is enough utilization of your products and that there isn't a pull ahead or hoarding behavior because of tight supply, competition, or other factors? What checks have you built in the system to give us confidence that monetization is keeping pace with your really very strong shipment growth?
Well, I guess there's the big picture view that I'll come to, but I'll answer your question directly. The demand for GPUs in all the data centers is incredible. We're racing every single day, and the reason for that is because applications like ChatGPT and GPT-4o, and now it's going to be multimodality, and Gemini and its ramp and Anthropic, and all of the work that's being done at all the CSPs are consuming every GPU that's out there. There's also a long line of generative AI startups, some 15,000, 20,000 startups that in all different fields, from multimedia to digital characters, of course, all kinds of design tool productivity applications, digital biology, the moving of the AV industry to video so that they can train end-to-end models to expand the operating domain of self-driving cars. The list is just quite extraordinary. We're racing, actually. Customers are putting a lot of pressure on us to deliver the systems and stand it up as quickly as possible. And of course, I haven't even mentioned all of the sovereign AIs who would like to train all of their regional natural resource of their country, which is their data, to train their regional models. And there's a lot of pressure to stand those systems up. So anyhow, the demand, I think, is really, really high, and it outstrips our supply. Longer term, that's the reason why I jumped in to make a few comments. Longer term, we're completely redesigning how computers work, and this is a platform shift. Of course, it's been compared to other platform shifts in the past, but time will clearly tell that this is much more profound than previous platform shifts. And the reason for that is because the computer is no longer an instruction-driven only computer. It's an intention understanding computer. And it understands, of course, the way we interact with it, but it also understands our meaning, what we intend, that we asked it to do, and it has the ability to reason, inference iteratively to process a plan, and come back with a solution. And so every aspect of the computer is changing in such a way that instead of retrieving pre-recorded files, it is now generating contextually relevant, intelligent answers. And so that's going to change computing stacks all over the world. And you saw a build that, in fact, even the PC computing stack is going to get revolutionized. And this is just the beginning of all the things that, what people see today are the beginning of the things that we're working in our labs and the things that we're doing with all the startups and large companies and developers all over the world. It's going to be quite extraordinary.
Our next question will come from the line of Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. Understanding what you just said about how strong demand is, you have a lot of demand for H200 and for Blackwell products. Do you anticipate any kind of pause with Hopper and H100 as you sort of migrate to those products? Will people wait for those new products, which would be a good product to have, or do you think there's enough demand for H100 to sustain growth?
We see increasing demand of Hopper through this quarter. And we expect demand to outstrip supply for some time. As we now transition to H200, as we transition to Blackwell. Everybody is anxious to get their infrastructure online, and the reason for that is because they're saving money and making money. For that, they would like to do saving money and making money. For that, they would like to.
Line of Toshiya Hari with Goldman Sachs. Please go ahead.
Hi, thank you so much for taking the question. Jensen, I wanted to ask about competition. I think many of your cloud customers have announced, new or updates to their existing internal programs, right, in parallel to what they're working on with you guys. To what extent do you consider them as competitors, medium to long term? And in your view, do you think they're limited to addressing mostly internal workloads, or could they be broader in what they address going forward? Thank you.
Yeah, we're different in several ways. First, NVIDIA's accelerated computing architecture allows customers to process every aspect of their pipeline, from unstructured data processing to prepare it for training, to structured data processing, data frame processing like SQL to prepare it for training, to training, to inference. And as I was mentioning in my remarks, that inference has really fundamentally changed. It's now generation. It's not trying to just detect a cat, which was plenty hard in itself, but it has to generate every pixel of a cat. And so the generation process is a fundamentally different processing architecture, and it's one of the reasons why TensorRT LLM was so well received. We improved the performance in using the same chips on our architecture by a factor of 3. That kind of tells you something about the richness of our architecture and the richness of our software. So one, you could use NVIDIA for everything from computer vision to image processing to computer graphics to all modalities of computing. And as the world is now suffering from computing cost and computing energy inflation because general purpose computing has run its course, accelerated computing is really the sustainable way of going forward. So accelerated computing is how you're going to save money in computing, is how you're going to save energy in computing. And so the versatility of our platform results in the lowest TCO for their data centers. Second, we're in every cloud. And so for developers that are looking for a platform to develop on, starting with Nvidia is always a great choice. And we're on-prem, we're in the cloud, we're in computers of any size and shape. We're practically everywhere. And so that's the second reason. The third reason has to do with the fact that we build AI factories. And this is becoming more and apparent to people that AI is not a chip problem only. It starts, of course, with very good chips, and we build a whole bunch of chips for our AI factories, but it's a systems problem. In fact, even AI is now a systems problem. It's not just one large language model. It's a complex system of a whole bunch of large language models that are working together. And so the fact that NVIDIA builds this system causes us to optimize all of our chips to work together as a system, to be able to have software that operates as a system, and to be able to optimize across the system. And just to put it in perspective in simple numbers, if you had a $5 billion infrastructure and you improve the performance by a factor of 2, which we routinely do, when you improve the infrastructure by a factor of 2, the value to you is $5 billion. All the chips in that data center doesn't pay for it. And so the value of it is really quite extraordinary. And this is the reason why today performance matters everything. This is at a time when the highest performance is also the lowest cost, because the infrastructure cost of carrying all of these chips costs a lot of money, and it takes a lot of money to fund the data center, to operate the data center, the people that goes along with it, the power that goes along with it, the real estate that goes along with it. All of it adds up. And so the highest performance is also the lowest TCO.
Our next question will come from the line of Matt Ramsey with TD Cowen. Please go ahead.
Thank you very much. Good afternoon, everyone. Jensen, I've been in the data center industry my whole career. I've never seen the velocity that you guys are introducing new platforms at the same combination of the performance jumps that you're getting. I mean, 5x in training. Some of the stuff you talked about at GTC up to 30x in inference. And that it's an amazing thing to watch, but it also creates an interesting juxtaposition where the current generation of product that your customers are spending billions of dollars on, it's going to be not as competitive with your new stuff very, very much more quickly than the depreciation cycles of that product. So I'd like you to, if you wouldn't mind, speak a little bit about how you're seeing that situation evolve itself with customers. As you move to Blackwell, they're going to have very large installed bases, obviously software compatible, but large installed bases of product that's not nearly as performant as your new generation stuff. And it'd be interesting to hear what you see happening with customers along that path. Thank you.
Yeah, really appreciate it. Three points that I'd like to make. If you're 5% into the build out versus if you're 95% into the build out, you're going to feel very differently. And because you're only 5% into the build out, anyhow, you build as fast as you can. And when Blackwell comes, it's going to be terrific. And then after Blackwell, as you mentioned, we have other Blackwells coming. And then we're on a 1-year rhythm as we've explained to the world. And we want our customers to see our roadmap for as far as they like, but they're early in their build out anyways, and so they had to just keep on building. Okay, and so there's going to be a whole bunch of chips coming at them, and they just got to keep on building and just, if you will, performance average your way into it. So that's the smart thing to do. They need to make money today. They want to save money today, and time is really, really valuable to them. Let me give you an example of time being really valuable. Why this idea of standing up a data center instantaneously is so valuable, and getting this thing called time to train is so valuable. The reason for that is because the next company who reaches the next major plateau gets to announce a groundbreaking AI. And the second one after that gets to announce something that's, 0.3% better. And so the question is, do you want to be repeatedly the company delivering groundbreaking AI, or the company, delivering 0.3% better? And that's the reason why this race, as in all technology races, the race is so important. And you're seeing this race across multiple companies, because this is so vital to have technology leadership, for companies to trust the leadership and want to build on your platform, and know that the platform that they're building on is going to get better and better. And so leadership matters a great deal. Time to train matters a great deal. The difference between time to train that is, 3 months earlier just to get it done, in order to get time to train on a 3 months project, getting started 3 months earlier is everything. And so it's the reason why we're standing up Hopper systems like mad right now, because the next plateau is just around the corner. And so that's the second reason. The first comment that you made is really a great comment, which is, how is it that we're moving so fast and advancing so quickly? Because we have all the stacks here. We literally build the entire data center, and we can monitor everything, measure everything, optimize across everything. We know where all the bottlenecks are. We're not guessing about it. We're not putting up PowerPoint slides that look good. We're actually, we also like our PowerPoint slides to look good, but we're delivering systems that perform at scale. And the reason why we know they perform at scale is because we built it all here. Now, one of the things that we do that's a bit of a miracle is that we build entire AI infrastructures here, but then we disaggregate it and integrate it into our customers' data centers however they like. But we know how it's going to perform, and we know where the bottlenecks are. We know where we need to optimize with them, and we know where we have to help them improve their infrastructure to achieve the most performance. This deep, intimate knowledge at the entire data center scale is fundamentally what sets us apart today. We build every single chip from the ground up. We know exactly how processing is done across the entire system. And so we understand exactly how it's going to perform and how to get the most out of it with every single generation. And so I appreciate it. Those are the 3 points.
Your next question will come from the line of Mark Lipacis with Evercore ISI. Please go ahead.
Hi, thanks for taking my question. Jensen, in the past, you've made the observation that general purpose computing ecosystems typically dominated each computing era, and I believe the argument was that they could adapt to different workloads, get higher utilization, drive cost compute cycle down, and this was a motivation for why you were driving to a general purpose GPU CUDA ecosystem for accelerated computing. And if I mischaracterize that observation, please do let me know. So the question is, given that the workloads that are driving demand for your solutions are being driven by neural network training and inferencing, which on the surface seem like a limited number of workloads, then it might also seem to lend themselves to custom solutions. And so then the question is, does the general purpose computing framework become more at risk, or is there enough variability or a rapid enough evolution on these workloads that support that historical general purpose framework? Thank you.
Yeah, NVIDIA's accelerated computing is versatile, but I wouldn't call it general purpose. Like, for example, we wouldn't be very good at running the spreadsheet. That was really designed for general purpose computing. And so the control loop of an operating system code probably isn't fantastic for general purpose computing, not for accelerated computing. And so I would say that we're versatile, and that's usually the way I describe it. There's a rich domain of applications that we're able to accelerate over the years, but they all have a lot of commonalities. Maybe some deep differences, but commonalities. They're all things that I can run in parallel. They're all heavily threaded. 5% of the code represents 99% of the runtime, for example. Those are all properties of accelerated computing. The versatility of our platform and the fact that we design entire systems is the reason why, over the course of the last 10 years or so, the number of startups that you guys have asked me about in these conference calls is fairly large. And every single one of them, because of the brittleness of their architecture, the moment generative AI came along, or the moment diffusion models came along, the moment the next models are coming along now, and now all of a sudden, look at this, large language models with memory. Because the large language model needs to have memory so they can carry on a conversation with you, understand the context. All of a sudden, the versatility of the Grace memory became super important. And so each one of these advances in generative AI and the advancement of AI really begs for not having a widget that's designed for one model, but to have something that is really good for this entire domain, properties of this entire domain, but obeys the first principles of software. That software is going to continue to evolve. That software is going to keep getting better and bigger. We believe in the scaling of these models. There's a lot of reasons why we're going to scale by easily 1 million times in the coming few years for good reasons, and we're looking forward to it, and we're ready for it. And so the versatility of our platform is really quite key, and it's not, if you're too brittle and too specific, you might as well just build an FPGA or you build an ASIC or something like that, but that's hardly a computer.
Our next question will come from the line of Blaine Curtis with Jefferies. Please go ahead.
Hey, thanks for taking my question. I actually kind of curious, being supply constrained, how do you think about, you came out with a product for China H20. I'm assuming there'd be a ton of demand for it, but obviously you're trying to serve your customers with, the other Hopper products. Just kind of curious how you're thinking about that in the second half. You could elaborate, any impacts, what you're thinking for sales as well as gross margin.
I didn't hear the question. Something bleeped out.
H20 and how you're thinking about allocating supply between the different Hopper products.
Well, we have customers that we honor, and we do our best for every customer. It is the case that our business in China is substantially lower than the levels of the past, and it's a lot more competitive in China now because of the limitations on our technology, and so those matters are true. However, we continue to do our best to serve the customers in the markets there, and to the best of our ability, we'll do our best. And so, but that, I think overall the comments that we made about demand outstripping supply is for the entire market, and particularly so for H200 and Blackwell towards the end of the year.
Our next question will come from the line of Srini Pajjuri with Raymond James. Please go ahead.
Thank you. Jensen, actually more of a clarification on what you said. GB200 systems, it looks like there is a significant demand for systems. Historically, I think you've sold a lot of HGX boards and some GPUs, and the systems business was relatively small. So I'm just curious, why is it that now you are seeing such a strong demand for systems going forward? Is it just the TCO, or is it something else, or is it just the architecture? Thank you.
Yeah, I appreciate that. In fact, the way we sell GB200 is the same. We disaggregate all of the components that make sense, and we integrate them into computer makers. We have 100 different computer sys configurations that are coming this year for Blackwell, and that is off the charts. Hopper, frankly, had only half, but that's at its peak. You know, it started out with way less than that even, and so you're going to see liquid cooled version, air cooled version, x86 versions, Grace versions, you know, so on and so forth. And there's a whole bunch of systems that are being designed, and they're offered from all of our ecosystem of great partners. Nothing has really changed. Now, of course, the Blackwell platform has expanded our offering tremendously. The integration of CPUs and the much more compressed density of computing, liquid cooling is going to save data centers a lot of money in provisioning power, and not to mention to be more energy efficient. And so it's a much better solution. It's more expansive, meaning that we offer a lot more components of a data center, and everybody wins. You know, the data center gets much higher performance, networking, from networking switches, networking, of course, NICs. We have Ethernet now, so that we can bring NVIDIA AI to a large-scale NVIDIA AI to customers who only know how to operate Ethernet because of the ecosystem that they have, and so Blackwell is much more expansive. We have a lot more to offer our customers this generation around.
Our next question will come from the line of William Stein with Truist Securities. Please go ahead.
Great. Thanks for taking my question. Jensen, at some point, NVIDIA decided that while there were reasonably good CPUs available for data center operations, your ARM-based Grace CPU provided some real advantage that made that technology worth delivering to customers, perhaps related to cost or power consumption or technical synergies between Grace and Hopper or Grace and Blackwell. Can you address whether there could be a similar dynamic that might emerge on the client side, whereby while there are very good solutions, you've highlighted that Intel and AMD are very good partners and deliver great products in x86, but there might be some, especially in emerging AI workloads, some advantage that NVIDIA can deliver that others have more of a challenge?
Well, you mentioned some really good reasons. It is true that for many of the applications, our partnership with our x86 partners are really terrific, and we build excellent systems together. But Grace allows us to do something that isn't possible with the system configuration today. The memory system between Grace and Hopper are coherent and connected. The interconnect between the two chips, calling it two chips is almost weird because it's like a super chip. The two of them are connected with this interface that's like a terabytes per second. Yeah, it's off the charts. And the memory that's used by Grace is LPDDR. It's the first data center grade low power memory. And so we save a lot of power on every single node. And then finally, because of the architecture, because we can create our own architecture with the entire system now, we could create something that has a really large NVLink domain, which is vitally important to the next generation large language models for inferencing. And so you saw that GB200 has a 72 node NVLink domain. That's like 72 Blackwells connected together into one giant GPU. And so we needed Grace Blackwells to be able to do that. And so there are architectural reasons, there are software programming reasons, and then there's system reasons that are essential for us to build them that way. And so if we see opportunities like that, we'll explore it. And so today, as you saw at the build yesterday, which I thought was really excellent, Satya announced the next generation PCs, Copilot plus PC, which runs fantastically on Nvidia's RTX GPUs that are shipping in laptops. But it also supports ARM beautifully, and so it opens up opportunities for system innovation, even for PCs.
Our last question comes from the line of C.J. Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess, Jensen, a bit of a longer-term question. I know Blackwell hasn't even launched yet, but obviously investors are forward-looking, and amidst rising potential competition from GPUs and custom ASICs, how are you thinking about NVIDIA's pace of innovation ahead? Your million-fold scaling over the last decade, truly impressive. CUDA, sparsity, precision, grace, coherent connectivity. When you look forward, what frictions need to be solved in the coming decade? And I guess maybe more importantly, what are you willing to share with us today?
Well, I can announce that after Blackwell, there's another chip, and we are on a 1-year rhythm, and so you can also count on us having new networking technology on a very fast rhythm. We're announcing Spectrum X for Ethernet, but we're all in on Ethernet, and we have a really exciting roadmap coming for Ethernet. We have a rich ecosystem of partners. Dell announced that they're taking Spectrum X to market. We have a rich ecosystem of customers and partners who are going to announce taking our entire AI factory architecture to market. And so for companies that want the ultimate performance, we have InfiniBand Computing Fabric. InfiniBand is a computing fabric. Ethernet's a network. And InfiniBand, over the years, started out as a computing fabric, became a better and better network. Ethernet is a network. And with Spectrum X, we're going to make it a much better computing fabric. And we're committed, fully committed to all three links: NVLink computing fabric for a single computing domain, to InfiniBand computing fabric, to Ethernet networking computing fabric. And so we're going to take all three of them forward at a very fast clip. And so you're going to see new switches coming, new NICs coming, new capability, new software stacks that run on all three of them. New CPUs, new GPUs, new networking NICs, new switches, a mountain of chips that are coming. And all of it, the beautiful thing is all of it runs CUDA, and all of it runs our entire software stack. So if you invest today on our software stack, without doing anything at all, it's just going to get faster and faster and faster and faster. And if you invest in our architecture today, without doing anything, it will go to more and more clouds and more data centers, and everything just runs. And so I think the pace of innovation that we're bringing will drive up the capability on the one hand and drive down the TCO on the other hand. And so we should be able to scale out with the NVIDIA architecture for this new era of computing and start this new industrial revolution where we manufacture not just software anymore, but we manufacture artificial intelligence tokens, and we're going to do that at scale. Thank you.
That will conclude our question and answer session and our call for today. We thank you all for joining, and you may now disconnect.
All right, guys, let's talk about this for just a minute. Give me 1 second. Let me hit this off real quick. And if Jim Cramer in the background is a little bit too loud, let's talk about this. All right, give me 1 second. Let me turn this off. All right, and we'll go to the big screen. Let me go here. Leave. Hope you guys are doing great today. Appreciate y'all for being here. If you could hit the like button, subscribe. If you haven't already done so, we trade live right here Monday through Friday, 7:30 to 4, 7 o'clock, sometimes 6:30. Oh, yeah, we can't do that one. All right, so let's talk about this. Talk about it. All right, so the reason I wrote this out is because I kind of wanted to see how the stock reacted on certain points and certain points that we could remember and talk about. Let's get right into it. Chip demand exceeds supply. Okay, that was the first thing that sent this up to a new high right here. Pretty much saying that we cannot make enough to provide all these companies with what they need, and everything that we are going to make, they're going to be sold. So that right there is a good sign for a few reasons. Now, if you guys want to chime in, all right, chime in, because I'm not here to say that I know it all. I'm just going to take it for common sense. Revenue for what they have for orders. I don't know if they have new orders, if they're going to save some of those orders for next year, for next year's earnings, right? And not really just go all out at once, right? Because what's that going to do to you? It's going to say, you know what? We have all these. We know what we can take. We'll take what we can handle, because we already know that exceeds not only our share price, but our business model, or our business, our workers. It just benefits everyone. As you guys can tell, even if you haven't watched it, but just watch Microsoft's Tech Day, whatever you want to call it. They're going big on full stack, this, that, the third. So they're spending a lot of money. That people say, how are you able to monetize this? Well, Nvidia in and of itself is monetizing it, because Microsoft has to buy the stacks and use their product to build what they want. All right, so this AI stuff, there is money behind it. This is like company to company, or business to company. This, that, the third. So chip demand exceeding supply. So they may not come out on their earnings. Maybe they will, maybe they won't. I don't know. But new orders, right? New orders are orders that are in progress, right? Being built, that have been paid for, half down, whatever. However that works. We don't need to get into all that. But pretty much we're booked all year. We're booked, all right? Maybe these new orders that come in for different products and different things, they save for next. Or maybe we'll see it on the earnings call, but either way, everything, they're pretty much stating whatever they can build is pretty much going to be going and sold. We'll go on to the questions, and that took you through a new high. So put this mark right here, which we're pulling back into right now. All right, we're pulling back into this area right now. You made a new high, now we're pulling back to it. You broke it on some really nice volume, so chances are this should hold. That in and of itself, the product being sold at the end of the day, should trump the most of this. Let's go to the second one. All right, full stack talk. All right, there was this talk with full stack, which you guys, again, with Microsoft and everything, there was a little bit of talk there, not too much, but this is really extended through the high here. Now, I can't exactly remember what candle. Okay, so it was this one here. Okay, second. Oh, that's a car. I was like, what the heck? Questions start right here. All right, questions get started right here. This bar right here was them asking, I think he was from Morgan Stanley. He asked about the cooling system, this, that, and the third, and the person that's making it, as far as getting the products to them, this, that, the third, are there going to be any issues getting it from a supply-demand side? Not of how it works, is it working, but is that company, able to keep up with the demand that you have? And you had a nice full bar there. Expenses, okay? Here was expensive. I probably should have put on a little bit more on this down bar here. That we're talking about expenses. I'll have to go back to cover more of that. It's so funny because right here, right, I was kind of just listening to it, and then I'm like, hey, what about China? What about China? I haven't heard anything about China. Then it finally comes out. Along with the two biggest things, and I have been stating this for a while, for anybody like me who isn't huge tech savvy person that is in the IT, builds this stuff, knows all about it. All right, I'm a trader. I only know so much, okay? I only know so much about the economics, the sentiment. As long as I know how to read it, I can trade it, and that's all I need. But they brought up China, okay? The part about China was not selling to them, but this is an important, very, very important part. This is China being able to keep up with where they're at, okay? And with this maxed out part. Because I talked about this for a few days, or I had brought it up in the past a few different times, okay? Where we are at, from the way I take it, is that you have pretty much a square copper piece, we'll say, right? A square copper instead of lines, right? Instead of like a wire, all right? So that enables the transistors or the electrodes or whatever, the information for the powering of whatever it is that you need through the computer to run and move faster, save more, and run faster. And I wrote here maxed out because they are at a point, and you heard them bring up new products and the Ethernet. Maybe they're thinking about going this Ethernet route. As far as, see, this part with it being maxed out is the GPU in and of itself, okay, with the transistors. And then this Ethernet cord is obviously leaving the chip, going to the computer or wherever, they hook up and go to, okay? This maxed out part is, and I'm glad you commented that below, because I said, if for anybody that wants to learn about this and know something about what's going on in this industry, is they're pretty much maxed out on the technology, and with AI that is coming forth, they need to find a way. The way it seems is they're already thinking about it, and you heard him stress about the new products and new things that are going to be coming, because they understand that there's going to be so much power that's going to be needed, and they're pretty much tapped out between the material and how this information is. When I say information, I mean the electrodes and electronics itself moving in throughout your computer, from the computer to a screen, or from the stacks to wherever it's going to go to the cloud, right? But inside those stacks and inside your computer, how fast is it able to, just be able to work, right? If you're running large data sets and a lot going on, they're pretty much maxed out. Okay, and that's a very important part to this, because they're at a crossroads where they feel like they have to find, whether it's something outside of copper or making it bigger. They're trying to find a way to make things work faster and to be able to keep up with what's going on. On the other hand, you have China. Since they are maxed out, China's a few years behind, but not necessarily. It allows them to keep up, okay? It allows them to develop whatever it is that they need, while we're here just like stuck, right, with like a wall. It's like, damn, like, we're trying to take this to the next level, but we've already taken it so many levels. We're maxed out. We got to get new material, a new design, all of the above, right? Not just a new design, not just new material, but all of the above, right? Because, copper can only allow things to go so much faster. And again, I say this is they're using pretty much a square piece instead of wires, right? Instead of like a copper wire that it runs through, you're looking at a square, you're just looking at like a film, okay? Where they can just run through them. They can move around on their own for the most part, okay? So that was an important part. And then here they talked about the Ethernet and the new products. And that's when you got this sell-off from this level. Now we need to see this full stack, or really the chip demand is exceeding the supply. Okay, they can only make so much, and they're full. So that means money's coming in at the end of the day. And I will watch this level tomorrow, guys. I will be watching this level tomorrow. And tomorrow during the live stream at lunchtime, we'll go ahead. And if you guys want to at lunchtime, when things calm down, we still have initial jobless claims tomorrow. We'll watch that documentary. It's only about 15, 20 minutes long. And for anybody that doesn't have a heads up on what's going on in the industry, and this is a big part, I'm telling you guys, this is big, and I bring it up for a reason, is they're pretty much maxed out on the performance. The performance is pretty much maxed out. And then we have China here, that is just like, the longer we can't find something to take it to the next level, they're just catching up. And that's, it is what it is, right? So it sounds like they're there developing, trying to find new ways and new products and new material to be able to take it to the next level. And I'm telling you right now, just I can see it. Okay, let's go through some of the names that rallied off of this. All right, you had a lot. Look at Taiwan Semiconductor, just making new highs. Taiwan Semiconductors making new highs. All right, QQQ's obviously made new highs. Snowflake, will cover their earnings and go over them tomorrow, or I'll cover it tonight. We'll talk about it in the morning. We trade live right here. Guys, this is big. All right, and you may not get this information anywhere else. And I'm not one to sit here and act like I know. I'm not a tech guy or anything, but it is important to just understand the fact. Two things taken away. The best part about it, the only thing we should really be taking away is the supply is taking, the demand is exceeding the supply. So the money is there, the business is there. There is a need that they're full for the year what they can make, and they're still bringing on new orders for the most part. I feel like they're going to save some of that for 2026, to be honest with you. And then the second biggest part is transitioning from where we are to that next level, whether it be, titanium instead of copper, right? Because now, again, as I stated, you notice how they're using squares, like a square film of copper instead of like wires, okay? Because they've taken it so far, they're pretty much maxed out. And you're hearing them talk about that. So those are the two things you need to take away. So if you hear them say, we've came out with a really new product that allows us to go to the next level, all right? Whatever that is, I'm telling you right now, I think that is the next catalyst to really take Nvidia to the next step. And for anybody that was here that just turned away from that, you did yourself a disservice. All right, I don't know if we have people here. We don't. I feel bad for the one or two people that just clicked in here because they did themselves a disservice, because I need you to understand what it is that I'm saying. If you hear Nvidia or they have an investor day that just seems like they're promoting it a lot, and they pretty much come out and say, hey, we've taken this thing to the next level, guys, that is the next leg rally for Nvidia, because that means they've done the unthinkable. Not really unthinkable, but they've literally taken the technology to the next step. Okay, again, I reiterate, they're stuck right now within the processors, the transistors, which is pretty much like a copper film that allows it to run and run fast instead of the wires. So they went from wired copper to that. It's just an example. And it's like, where do they go from now? Is it titanium? Is it like a gold? Like, what is it? Is it silver? What allows it to just be able to run fast, handle the heat, and take it to the next level? That is the next rally in Nvidia. It'll continue to go because, again, at the end of the day, the demand is exceeding supply. So there's money, big business. You see it with the Microsoft stuff. Let's go through some of the names real quick. Snowflake. So you just got the first quarter. We'll cover that tomorrow with the new CEO. Keep that in mind. Nice pop there. I'll have to go over that later on. SMCI. You heard Xpeng brought up there. Oracle, new highs. Taiwan Semiconductor, new highs. AMD kind of just failed. I don't know if that's still the 100-day. I'm pretty sure it is, that blue boxes, because I moved them accordingly. So let's see. Intel, we can check out Intel. We'll go to the bigger chart if you guys would like to. All right. I'm going to be watching this level. I still think we're going to get new highs just off the fact that you have demand exceeding supply. So the earnings are going to be there for the rest of the year. That's important. Me personally, I'm going to be waiting for, are they able to produce that next level technology that allows them to take AI and everything else further. They're stuck. Okay, you're hearing it. They're stuck. They're saying it, but they're not. They're saying new products, but again, it's just the same old stuff. All right, they know what they need, and they don't know where it's at. Okay, because of the material, and So I'm gonna let the engineers be the engineers. Intel. Let's go look at Intel, and again, it's always good to go back over the earnings call, because just like movies, you'll hear things that you didn't hear the first time. All right, we can take all the notes that we want, but at the end of the day, go back and refresh your memory and write down key stuff. When the questions start, just like I did, and which you'll see here. All right, NVDA. you'll see that's exactly what we did. You have to, especially for a company like this is, in my opinion, right now, this is not necessarily the market, because it's not, but this is one of the biggest companies. And again, if they find a new technology, I'm telling y'all right now, watch out. This thing will be at 2,000, and or if you want to call it 200, call it 200 or 500, whatever it would be. All right. If this thing doubles, it's because they found a new technology, and or you just got 2-3 years of this continuous demand exceeding supply. Okay, which I thought was an important part, and it was important because 4 minutes later you went and made that new high. So at the end of the day, there's that. SMCI, there was talk of super micro. All right, let's see here. It barely made a new high a day. Did it make a new high a day? It did, and then it took it back, unfortunately, guys. So it feels a little bit like we're a little stuck. TSM, all right, TSM, in my opinion, so far was the winner out of all this. Okay, let's go look at ASML. If you don't know what ASML is the one that they make the product out. They're out of like Sweden or Deutsch somewhere, some Deutsch place, Sweden maybe. I think they're out of Sweden. ASML allows them to build. They make the product to build the transistors. So ASML, we did Taiwan Semiconductor, Qualcomm. Let's go look at Qualcomm. They are pulled back underneath of the high, so they did not make a new high. So write these names down. Taiwan Semiconductor, new high. Okay. Nvidia, new high. AMD, no new high. Right? It took it back. It quickly got above it, barely. Then it took it back. SMCI, same thing, no new high. So we'll go through here. Intel, it's still down in the dumps. This thing's just weak. What else do we have? Micron. Look, watch Micron. I love this name. I do. I think Micron's, and look, they did make a new high. They're turning it back into resistance, unfortunately. All right. Unfortunately, that is taking it back. So we'll see what happens there with Micron. I really wish they would have held 129. Let's go look real quick at the heat map and go through some of these names so I don't forget. Let's look at Texas Instruments. I think they're kind of irrelevant personally. Okay. So TSM, Oracle. I know Oracle really held this high. Oracle made a new high and held it. Okay, it's holding that new high. And there was some more, there's more data out with Oracle. Keep Oracle as a trade idea. All right, just like Starbucks. All right, we've been trading this. This was a 500% trade today. Just for anybody that's just finding the channel, this was a huge trade today, and we've been on it. So, right, there's been a catalyst there, institutional buying. Keep it, write it down. Look at this. Get pullbacks, buy the dip. All right, buy the dip and let it work for you as long as it's working. Ride it till the wheels fall off. All right, you have some resistance here. If we're able to hold 125, this area here on Oracle, I would like to try and take this thing back to 128, maybe even 130, 129. Okay, I don't know if we have any major moving averages coming in. All right, so no, we don't. Look, if we hold this level, this is the time. I'm telling you guys right now, if you guys see me this week and I say I traded Oracle, I'm telling you right now, we have plenty of room to 127.50, like that 129 area, 128. But I still think there's nothing stopping you. There's no resistance there up until you get to 130. I think Oracle holds this level, 125.50, we're going to 130. This is a big database. This is... Again, it's one of the only ones making new highs. So Taiwan Semiconductors, Oracle, they all made new highs with Nvidia. All right, AMD, not so much. Intel, not so much. Qualcomm, not so much. You could look for Qualcomm to go back and hold its highs. Let's see here. What am I forgetting? I did Micron. It didn't hold. There was another. There's another M1. What is it? Not Micron, but it's... How do I always forget about this one. Marvel, MRVL, Marvel. That's right. I always forget about that one. MRVL. Let's go take a look at this. Marvel. See, look, it did the same thing as Micron. right? It made that new high, and then it's taking it back. Oh, here it goes. Look, it's trying to bounce. I think you need this. Let's go look at like a 15-minute chart real quick. All right. Yeah, you got a nice little double top there. All right, I think as long as you're above 74, I would look for buys at around like 74 to 74.50, 74.45. All right, as long as it's holding there. That's a nice wedge you have there on that's almost like a failed breakdown if you see it. All right, so there's an ascending wedge, which is technically a reversal pattern, but anyway, again, we'll go more into this. Don't forget Snowflake's the first quarter of their new CEO. We just got the earnings there. We'll cover that tomorrow. I have a lot of things to do. I'll leave you with this one more time with Nvidia. Okay, go back if you'd like to. Go listen to it one more time. It's not that long. Okay, there's a lot going on here, and the main takeaways are two things, mainly one thing, but the second is also very important. Demand is exceeding the supply. That speaks for itself. Money's there. And again, the last final thing, if you see or get a glimpse or get word or just get the feeling that, hey, I think Nvidia is about to introduce that new product that's going to take them there. And what do I mean by that? We're tapped out right now with the technology, with copper and the material and the design to really take it to the next level. We're at a halt. We're at a standstill. They figure that out. I'm going to tell you right now, watch out. All right. So I'll leave you guys with that. If you guys have questions, go ahead, throw them down below. Do us a big one. Hit the like button, subscribe if you haven't already subscribed. I trade live right here on this channel, Monday through Friday, all day long in the morning. We had a great day today. All of the watch list trade ideas have worked out every day this week. Fortunately, it's not always going to be like that, but it was like that this week. All right. So I hope you guys have a great night. If you have questions, I'll wait a few minutes. If there's any tickers you guys want to cover or talk about, throw them in the chat below, and I'll be sure to get to it. I'll just give you guys a couple minutes. Outside of that, I'll be on at around 7 o'clock tomorrow morning. Starbucks, huge. I wasn't able to get on that. But we gave the $80 call out, the 80 price point call on Starbucks. That was over 500% in 3 hours, 4 hours it was. Just a monster. This thing has just been, guys, it's an ATM. Keep it between us. I think it's a little late now if you're just finding out about it, but we've been riding this thing ever since the earnings. We bought this, all right? I gave this alert out as well. And again, I trade right here for free. Right here on this channel, we just ask you to hit the like button, post your play. Or if you see something with relative strength, relative weakness, we work together here. All right, huge breakout again. Boom, boom. We were on it those days, that day, and today. It's been a nice ATM for us. So find that relative strength and just ride it till the wheels fall off. And we're probably going to do that with TSM. Okay, that's another one. All right, Oracle. All right, same thing, right? This has not one, but two catalysts. Oracle has two catalysts now, so I'll probably start looking for this one. Nobody has anything for us. Do us a big one. Think about subscribing. We get to 1,000 subscribers. I am doing a nice giveaway, probably cash. I'm going to be honest with you. Nobody knows that, but I'm going to do a nice cash gift for everyone that subscribed. I do want to thank you guys for being here. What an earnings call. We got some information on China, but really more importantly, we got the verdict that, they're at a standstill with the not necessarily the technology, but the material, and to be able to take this to where they want it, which is the next level for AI, right? To be able to handle bigger, faster, just bigger data, all right? This is a big scene that's coming on, and you can tell. If you don't know, just go have a look at the Microsoft event that's been taking place this week, and you'll see they're spending a ton of money on full stack, and Nvidia is the prize winner for that. And that's why, you're seeing supply eat up demand pretty much, all right? Demand is exceeding the supply that they can make them, okay? So they're going to be good. I feel like they're going to make their guidance this year. So unless you see something crazy happen where you sense canceling of orders, which I don't think you'll see, I think they're booked for the whole year, guys. I think they're booked for the rest of the year, and don't be surprised. People are going to talk this thing down. I think they're saving a lot of the orders and what they have coming and some of these new orders. I think they're going to save them for 2026. 2025, I'm sorry. I'm already a year ahead. All right, we got a little bit here. We'll talk more about this tomorrow. I'm going to go make some dinner. I'm going to get some of these levels and trade ideas again kind of ready for tomorrow, see where we're at. Initial jobless claims tomorrow. We'll keep an eye on that. So far, a great week, guys. Just clap it up for you guys, myself. We've been attacking these names, right? Having this, and this is why I started this. I've been trading for over, I don't know, it's probably close to 12 years now, 11 years, over 10 years, but it's been around 11, 12 years. It allows us, to be able to work together to get into different sectors and find that relative strength and relative weakness, and we ride it together and we feed each other, right? We bring forth ideas and say, hey, dude, we got 2-3 times the volume here. Nice candles closing at highs. Let's get on it, rock and roll, and that's what we do here, right? We're here to help each other. At the end of the day, make some money and eat. We have a good time, Through the ups and downs, I appreciate all of you guys. If you guys, I'll wait. If you guys have questions or anything, post them down below real quick. I'm going to go make some dinner, and I'm going to get prepared for tomorrow because tomorrow is going to be another big day. I was really surprised with the volatility today in the overall indexes. I mean, between the SPY, the Qs, this was nice. By lunchtime, if you didn't sense to get short, you should have been here with us, all right? You got to rally, reject, and it's like rally, okay, let's reject, rally, okay, you already know what's about to happen, reject. All right, I posted on Twitter, do not buy put, or I didn't say don't, because I'm not going to tell you what to do. But if you think buying puts at the close or holding puts into tomorrow is going to do you any good, this is probably what you're going to say. I'm not saying you guys, but just people, right? People in general. Go ahead and buy your puts for tomorrow. Good for nothing tricksters. I thought that shit was hilarious. But anyway, tomorrow morning, 7 o'clock, bright and early. We'll be here. We'll get our ideas. We'll get our levels. And we'll have another great day. At least I'm going to pray and hope, every day this week. It's not always going to be like that. But these trade ideas have just, if you've just taken them, wrote down the levels, the entries, the expectations, and you followed the trend to the targets. Again, I give you guys my entries and where I expect it to go and where I want to take profits. Amazon's, we said we take profits in front of 185. Tesla today, I hope you guys did not get hurt with Tesla. You'll have to join us tomorrow right here on this channel because I told you guys, you get a bounce into 184, you better watch out and take profits into 184. And I had that dotted line there for a reason. All right. I accidentally got long here. Took half off, very small loss. The other half off of that wick. It's like a 15-cent a contract gain. I did not mean to get into it, and I was really suspicious about Tesla today. I was like, hold up. Because if you guys notice, right, I'm going to leave you guys with one thing. I know a lot of you guys may know what you're doing and stuff like I'm not saying you don't. Take this for the rest of this week and for like the next, like till the end of the month, okay? Identify what the stock is reacting off of and when, all right? You saw here what I did with Nvidia. The minute that they said demand is exceeding the supply, Nvidia went and made a new high. We're going to look at that level, and we're going to know it because I have it written down when that was said and how it reacted. So we know that level, that sentiment from Nvidia took us to a new high. All right. Now, what would it be to take us, to break that level? Because that's telling us they're good for the rest of the year. 100-day moving average. Look at this on Tesla. If you locate these things, all right, support, right? Support. We break it. Resistance. All right. Resistance. Here we go. 100-day. Boom. Boom. And that's exactly what we did today. Yes. Here's the thing. Tesla did close at 179.90, right there at 180. So, is this a low volume bounce? Is it a low volume bounce? Well, first you got to find out if that's low. I don't think that's low volume at all. It's not as much as you had to the buy side. So, was it somebody just getting margin called and just covering their position because of Nvidia, and they had to, in case Nvidia pulled back, it's not ironic Nvidia had earnings today and this happened, and I don't know. So, take it for what it is. Identify those things, you know. But outside of that, guys, the stream will be on at 7 a.m. in the morning. I'll give you guys my watch list, my ideas. If you guys we'll go through charts. You guys spam the ticker with chart or spam the chat with tickers. If you could do us a big one, subscribe, hit the like button. We're trying to get to 1,000 subscribers. We, as in me. Not really. There's nobody here. So maybe we'll throw the camera on tomorrow and stuff. I just didn't have it on for this. Great day today in chat. Great day. This great week, guys. Seriously, great week this week. I've been really keep this level. Keep this chip demand exceeding supply. Broke us to a new high. Keep that prior high there on watch. Keep this level on watch, like 987, 986.70ish. That 987 level. If you wick into it. All right. Thank you, guys. I'm going to get out of here. You guys have a great night. I'll catch y'all bright and early in the morning. If I find the time, which I doubt I will. I have a lot to do. Maybe I'll make a watch list, but I doubt it. I think that's it for the night. I appreciate all of y'all. All right? I'm going to see y'all tomorrow morning.